Hello, and thank you for tuning in to another edition of the Vulcan Report. I really hope that those of you who have been following along in the Vulcan Report have been taking some of these trades seriously. A whole lot of money has been on the table this week, and we've just been picking them off one by one. For those of you who are new to the Vulcan Report, welcome. What I'm going to do each day now, as I go over the entry points and all that good stuff, I'm going to try to do a brief tutorial on each one. It seems like we're getting new people coming aboard all the time, and people stopping by. So I think just a brief description ahead of each video will be warranted so that people can follow along. I also want to put out here a quick disclaimer. This is not easy, what I do, okay? It's very difficult. Trading is the most difficult yet rewarding thing that I have ever done career-wise in my life. I've spent almost 20 years in the making, and half of that time I was on Wall Street working for various entities, doing different things. I was also a principal in a major brokerage firm. I designed hundreds of systems for, how can I say this, wealthy and elite entities as well as individuals. Although I no longer work on Wall Street as a principal or registered agent, my information is still on file, especially with the NFA, the National Futures Association. Those of whom you that listen to this channel and subscribe to this channel, those of you who are actually clients of mine, you know this. When we hook up and all that, I give that information out. I think it's important that you always know who you're working with. You'll know that my U4 is clean. My track record is clean. I'm on file with the FBI, the CIA, the U.S. Postal Inspector, U.S. Customs, all of that. All of my stuff is documented. Never been to prison, never been to jail, never been accused of a crime, never had to pay reparations, none of that stuff. Never had to go before arbitration, never had to pay back a client money, never stole money, never took anything from anybody. So my paperwork is clean. So I can talk a little trash if I want to, because I do good work and I always have. That's why people come to me. I was the guy on the other side of the aisle, though. I wasn't one of these big gunslingers on Wall Street. I wasn't a big-time analyst making a killing and a salary and stuff like that. I worked in a different capacity, let's say that. I designed systems for people who wanted to extract large money from the market on a daily basis. I don't care what they do on Wall Street. I don't care how the market's rigged. I don't care what kind of intervention they do. I don't care if the Fed lowers rates or raises interest rates. That's always been irrelevant. I don't care if they have a million algorithms and computers and bots and the smartest and the biggest and the brightest brains on the planet. Who do you think I am? Something to ponder for you. How is it that I can do what I do each and every day? This is a big boys game. Trillions of dollars flow through the global markets on a daily basis. It is not easy doing what I do, even though I know I make it look easy at times. Sure, I get stopped out of positions. All you have to do is go back and watch a video or go to my blog and check out one of these InPlay printouts, and you'll see which trades worked out, which ones didn't. I mean, it's there for the world to see. There's nothing to hide there. That's why I do what I do. That's why most people don't do what I do, because they don't want to look bad, because they really can't do what they claim to do. But because I can, I put it out there so you can see for yourself. All right, enough of that. Let's jump into the outlook for Thursday. All right, we have a nice little list here of things. Some of you are not going to like what you see, but it is what it is. Remember, in trading, we take our emotions out. That's why this is called the Vulcan Report, because like our friend Mr. Spock from Star Trek, if you're going to be successful in trading, you need to think and act and respond like a Vulcan. Emotions have to come out of the picture. We are emotional beings by design. However, when you're trading, your emotions cannot be on the line. Your money is on the line, not your emotions. That's why this is called the Vulcan report. That's why I go by the name Vulcan. All right. So just a little tidbit in case you didn't know that. All right. With that aside, let's look at our first one that's highlighted here. This is BP. Okay. For the record, and for in the spirit of disclosure, yes, I've done work for BP. Past tense, did work for BP, did some work for BP. That's all I can say as far as what I did for BP. Can't go into any more detail than that. But I will tell you this. Up until the Gulf oil spill, believe it or not, BP has always run a very, very tight ship. Very tight ship. I don't know what in the world is going on down there in the Gulf, just to be honest with you. I really don't. That's very unlike BP. When I say they're by the book, I mean they don't sneeze unless they have a handkerchief already in hand. They don't play when it comes to these spills and things like that. If you knew, if you could just tour the plant and you would see what I'm talking about. All right. For those of you who don't know, they make it so that it's almost impossible to even have an accident at a plant. Did you know that? You know those big, huge drums that store the fuel and stuff in them? Those big tanks, those giant tanks. Do you know those things are explosion proof? Even if a nuke were to go off on a plant, they have it set up so that like this big foam stuff comes out from underneath of it and like protects it like in a dome. I can't go into all the details, but I'll just tell you this. It's almost impossible to have an accident on this capacity like we're seeing in the Gulf. That's how tight and by the book BP is. You don't get to be big like BP and have these kind of company destroying accidents. It's not by chance. So there's a lot more going on than meets the eye, meets the story. Some of you probably will want and will benefit from doing a little research online. Just Google it and see what's going on there. There's a lot of great even videos here on YouTube. You're probably not going to like what you see if you haven't really delved into the story, but the facts are the facts and they're there and you have to deal with them. So anyway, we have a sell on BP, selling short at $39.12, putting your protective buy stop at $40.71. All right, as you can see, excuse me, we don't have a post wave anticipation on this one, so you'll just kind of have to monitor this one throughout the day. Move your stop. You know our rule: always move the stop to break even at minimum. That way you're playing with the house's money, and if the market pulls back and stops you out, no harm, no foul. You didn't lose anything. You moved your stop to cover commissions, and you're ready for the next trade. Okay. All right. For those of you who are new, forgive my ranting. Let me just go over each one of these categories for you. On the left-hand side of the screen is the security's name. The next screen here, this category here, is your post-wave breakout. If you see a 1 here, that means that we're anticipating a huge explosive breakout followed by a huge volume and volatility that will drive the market possibly insane or create a new leg in the particular trend that it's in. All right, so these pulse waves are important. If you see a 1 in the column and then you see a long recommendation, which is a 1 in this column, it means that we're really expecting some big things. If you just see, like, for instance, this one here, ticker symbol DBA, there's no post wave anticipation, but we do have a breakout long buy signal. Again, so when you see the breakout longs, you want to kind of monitor them just to make, just to monitor the trade once you get filled, just in case things go a little raw or crazy in the market. Okay, so just keep that in mind. Another note: if you just see like this one here, the British pound, you see how this is a pulse wave, anticipation, but we don't have a breakout long to go with it on an intraday basis. Your breakout longs are intraday signals. Your pulse waves are long-term signals. Sometimes the two converge, and that makes for extraordinary powerful trade. However, if you get one without the other, you still got to take the trade. You don't just pick and choose. You don't just, oh, I'll take this trade, but I won't take that one. You got to take them all. That's what systems trading is about. You take every signal. That's just how it goes down. All right, the next field you'll see is buy. This gives you the price that you're going to buy. And the next one is your sell, and that's the price that you're going to sell. Here, this the short column. Again, if there's a 1 in these columns, ones and zeros. Zeros means there's nothing there. Ones means that there's something there. So, for instance, on the BP, you see that there's a short, which is a 1 here, but there's nothing here on the long side. So we're just looking to short today. No pulse wave, so we don't anticipate any big move, but it's enough for us to make money. The next column you see here is the uptrend column. Again, this one's blank, so that means it's not in an uptrend. The next column is an uptrend consolidation. Notice how that is also blank. So we're not in an uptrend. We're not even in an uptrend consolidation. The next column is downtrend consolidation, and then finally downtrend. All four of these columns here are blank. What that means is that this particular security is stuck inside the Kumo cloud, which means it's very consolidated. It's not doing anything. It's stuck in the cloud. It hasn't made a decision yet in one way or the other. But based on our pulse wave readings and other proprietary indicators that we use, we anticipate that it's going to break down, not break out. So that's why we put this this order here like that. Okay. So again, quick review: security name here, pulse wave anticipation, breakout long, buy, sell, short, pulse wave breakdown anticipation, uptrend consolidation, downtrend consolidation, full-blown downtrend. Okay, that's how you read it. It's not rocket science. At the end of the day, you can go back and you can review this and see which trades worked out, which ones didn't. It's just that simple. It's not rocket science. I even update this on the blog, and I put the printout on the blog so you can actually click on it and you can actually download a copy of it. That way you can keep a copy for your files if you want, and follow along and track your progress. Pretty simple, not rocket science. All right, next one we have here is crude oil. As you see here, we're anticipating a pulse wave, and we have an intraday breakout. We're going to go long at 83.03 with a stop at 81.55. Now, I will say this. There are times, and this is purely acceptable, and what I'll do is I'll do follow-up videos on some of these because additional analysis is warranted. But there are going to be times when we use our initial stops as stop and reverses. And we use stop and reverses when we're usually coming to an end of a trend, and it's possible that the trend is going to reverse. And if you're stopped out on a pulse wave entry, 99.99% of the time, the trend is going to reverse and do so sharply, and you don't want to be either long or short initially. You want to be stopped out in reverse direction and correct yourself. So that's how we do it. Most of our stop losses initially, though, are not stop and reverses unless otherwise indicated. Okay, so that's crude oil futures, and you see it's in an uptrend, a full-blown uptrend. So we're trading with the trend on that one. The next one, looking at commodities, the DBA. As you can see, we're looking for an intraday breakout long at $26.36, putting the stop loss at $25.97, and it too is in a full-blown uptrend. Next one we see is the Dow Jones, intraday breakout at 107.18 with a stop loss of 106.34. So let's go through these again. BP today we're going to sell at $39.12. We're going to put our protective stop loss at $40.71. All right. So if you're stopped out, that's a good thing. Being stopped out of a position for profit or loss is always a good thing. It's a good thing because it's part of money management. You let the market take you out. You let the market put you in the market, let the market take you out of the market. We don't chase markets. That's just what we do. All right, the next one we have here is the crude oil futures. As you can see here, Again,